What's up, guys? Welcome to another video. Hope you had a wonderful weekend away from the chat. Let me send the link. We'll have more persons join us. Share the link. Let me share the link so that we have more persons join the live stream. Okay, welcome once again to this channel. We analyze the Bitcoin chart along with Ethereum, the higher time frames down to the lower time frame for possible trading setups and how best we can take advantage of the opportunity the market presents. We'll be starting with the Bitcoin chart on the weekly time frame. Today being Monday, the beginning of the week, we are having a new weekly candle. But the way the previous candle closed is very interesting. We actually close with this setup. When we have these three candles, a red candle, a bearish candle, this could either be a doji, a hammer, or an inverse hammer. And then we have a volatile candle to the upside, more like an engulfing candle, engulfing the previous two candles. This is actually a morning star pattern, but we actually have it at downtrend. If you go down to Google, you can see that this is actually a morning star pattern. It actually signals a trend reversal. So for Bitcoin, we're actually having this on the weekly time frame. So this could actually signal a trend reversal on the Bitcoin chart. So with this in mind, the Bitcoin chart in this coming week, we can actually have a bullish week this week. Of course, we are at the highs. We expect some retracement before we entertain a trade, a long trade to the upside. So we go down to the lower time frame. We go down to the daily time frame now. The Bitcoin chart on the daily time frame. Remember, we had a break of structure from our previous videos. We had a break of structure. We broke above this our downtrend using our trend line on the Bitcoin chart. We broke above this our downtrend. We have created a new higher high on the Bitcoin chart. And if we are to continue this uptrend, we need to also create a higher low in the Bitcoin chart. So we created a higher high where our new higher low be. That's one thing we're also looking for, our new higher low. It's also important to know that this level where we are in, the level between the level of 21,800 and the level of 22,500 is a very important Fibonacci retracement level. Look at it from the swing high, the level of $24,500 to the swing low. You can see that currently we are actually at our Fibonacci retracement level. So this level, we can outline it. While it's true that on the weekly time frame we are having a bullish setup, on the daily time frame we are currently consolidating at our Fibonacci retracement level on the daily time frame. So we can actually consolidating at this level. So if we go down to the 4-hourly time frame, we can use the 4-hourly time frame. We need to remember we are looking for the next higher low in the Bitcoin chart. Our Fibonacci tool is a very flexible tool. If we are seeing the rejection from this level, then we can use our Fibonacci tool from either if the market to respect this level at the swing low to the swing high, from the swing low to the swing high. You could actually have this level, the level of 20,681 at the level of 20,320 as our 0.5 and 0.618 Fibonacci retracement level to form the next higher low. We also have a bounce for the continued move to the upside, since we are looking at an uptrend on the Bitcoin chart. So wherever level the market respects, we have this level, the level of 19,161. But also come down here, it's not also out of place if we have a bounce of this level 2 using our Fibonacci tool from the swing low, which is level of $21,200. $21,200. This level, so our 0.5 and 0.61 level could be between the level of $21,700 or level of 21,587. So wherever level the market is respecting, then we can then, what are we looking for at that level? We are looking for bullish consolidation. We are looking for double bottom chart patterns, consolidations at that level, bullish consolidations for us to entertain the trade to the upside. It's also important for us to note that while we are spotting the uptrend, this was our previous low. This was our previous low. This was our previous low. So a break of this level, would signal that we're going down to lower levels. So while we haven't broken this level, we are still in an uptrend. So if we break this level, we can then start entertaining, okay, the market will actually respect lower levels to the actual retracement level. At our 0.5 and 0.61 Fibonacci retracement level on the daily time frame, we expect volatility in this level. So we expect some sort of consolidations at this level. We expect some sort of consolidations at this level. So in the coming hours, we expect consolidations at this level. Then if we are going to break this, we are going to break our Fibonacci, our previous low, then remember on the weekly time frame we are looking at an uptrend. So we're looking for lower levels. We've outlined the level of $20,700, between the level of $20,700 and the level of $20,500. So at those levels we are looking for consolidations, bullish chart patterns for us to entertain a trade to the upside. So that's what we see on the Bitcoin chart. We've had a break of structure. We are expecting the market to give us a new higher low. Where will our new higher low be? Well, we can use our Fibonacci tool to outline key levels 0.5 and 0.618 Fibonacci retracement level. So right now we approach the level of 22,391, which is a very important resistance level. The exact resistance level is level of $22,500. So we cannot think of entering a long trade from here. Rather, we let the market do its thing, give us a retracement. So any form of retracement the market is giving us, we can then buy the market from such levels. So that's it on the Bitcoin chart. We then go to the Ethereum chart. Okay. So delete this. Let's have a clean chart. If you're new to our channel, we analyze the Bitcoin chart along with other cryptocurrencies from the higher time frames down to the lower time frame for possible trading setups and how best you can take advantage of the opportunity the market presents. So if you want to stay up to date, you can click on the subscribe button, turn on push notifications so you don't miss out on analysis like this. We only hold live streams and videos on the chat. And if you have any cryptocurrency you want us to analyze, feel free to drop it in the chat. Let's first analyze the Bitcoin chart and then the Ethereum chart. We'll be starting with the Ethereum chart on the daily time frame. Looking at Ethereum on the daily time frame too, this was a previous uptrend retracement rather to higher time frame Fibonacci retracement level, of which we had a break of structure, which gave us a new lower low. Now the market is currently giving us the next lower high. On Ethereum, we are currently in a downtrend on the daily time frame. The market gave us a new lower low. The market is currently approaching. It actually be giving us the next lower high. We use our Fibonacci tool from the swing high to the swing low. You can see we are actually consolidating at our 0.5 and 0.618 Fibonacci retracement level, which on Ethereum 0.618 Fibonacci retracement level is the level of 1,770 and between the level of 1,704. So on Ethereum, we are somewhat creating a new lower high at this level, and we are currently consolidating at our Fibonacci retracement level. So we can then go to 4-hour time frame to spot the trend to the upside. Spot the trend to the upside. And 4-hour time frame, we can use our trend line. We've not had a break of structure. This would have represented the trend to the upside. This is currently representing the trend to the upside on the 4-hour time frame. This is currently representing the trend to the upside on the 4-hour time frame. So we had a break of structure. We had a break below our trend line, but we haven't broken below our previous lows. On this 4-hour time frame, this is our previous low. We use our rectangle tool on the Ethereum chart. The previous lows, we've not had a break of structure below our previous low, which is the level of $1,700. So in the coming hours, we actually come back to test this level. But for us to confirm that we're actually going down, remember, we always wait for confirmation to use our path. This is what we're expecting of the Ethereum chart. If the market is giving us a break below this our previous lows, then creating a new lower low, a break of structure, then any form of retracement, you can then enter the trade for a new for the next lower high for us to sell the market for the continued move to the downside. This is what we see on the Ethereum chart. If we are having a break of structure, a break below the previous lows, remember we have to wait for confirm a clear break of structure, break below the previous low, then on the retracement, and then sell the market for a move to the downside on the Ethereum chart. If we are having a break of structure. Again, the market will actually keep giving us consolidations at this level, so we'll also be wary of fake outs too. We also want to wait for a clear break of structure, because this is actually a very important support level. It will actually bounce from here, keep giving us consolidations at this level. So we need to wait, be patient as the market does its thing. We want to also wait for confirmations. If the market is giving us a break of structure, we can attain a sell position at the next lower high. Because on the daily time frame, this move to the upside is only a retracement to our Fibonacci retracement level. So on the higher time frame, we are looking for sell opportunities on the chart. We also want to be wary of fake out. Remember, we are having a bullish setup on the weekly time frame on the Bitcoin chart. So the market will not give us a very volatile pullback to the downside. We may not expect the market to come as low as the level of $1,400. Rather, short sell opportunities, you could actually entertain it to the next next support level, because we could actually have a bounce. Remember, if Bitcoin move up, all the other cryptocurrency also move up, however the trading setup. So that is what we see on the Ethereum chart. Are waiting for a break of structure. The market is giving us a break of structure to sell the market for the downside. Okay. In our previous video, we also analyzed the Solana chart. We had a trading setup for Solana in our previous video. This was a trade we analyzed from our previous video on the Solana chart in the 4-hour time frame. We outlined this our resistance box. As a level of $36. Remember what we are looking for. We are looking for a clear break of structure. Solana chart has currently given us a clear break of structure for this our resistance box. That is actually a little bit messy. Let's clean this up a little. Go down to the daily time frame. Solana chart on the daily time frame, we were actually testing our support level. We had a bounce, just like BTC. We had a bounce, but we are actually at a resistance level, previous resistance level, which was between the level of 36 and 35 and $36 on the Solana chart. Then we could actually get rejected from this resistance level, but we have to wait if the market is giving us a clear break of structure. Like for example, right now the market is giving us a clear break of structure, then any form of retracement can then enter the trade for a move to the upside, signifying that the downtrend is over. We've had a break of structure, then the retracement to create a new lower, a new higher low, and then buy the market for a move to the upside. As traders, we will not be in this trade because rather, instead of being impulsive traders and enter the trade at the breakout, wait for the market to do its thing, any form of retracement, and you can then buy the market for a move to the upside. So the Solana chart has actually given us the break of structure we're expecting, break of structure, the breakout we're expecting, that's giving us. Wherever the market is expecting as the new highs, then to give us a retracement. So we could actually use our Fibonacci tool. If the market is respecting this level as a new high, the level of $38 as a new high, then any form of retracement on the lower time frame, so our Fibonacci retracement level, so our 0.5 and 0.61 Fibonacci retracement level, either the level of $36, 36.42 or the level of $36, to expect the consolidation, then we can then buy the market for a move to the upside. So you see why it's very important we wait for break of structure. We wait for break of structure. It's very important we wait for break of structure. Let the market do its thing. Let us have a clear break of structure. Let us have a clear breakout. Then on the retracement, any form of retracement, with reducing volume. We don't want to enter the trade when we are seeing a volatile 1 hourly candle to the downside. Clearly, this will be only a fake out. And the move will be to the downside. So where are we looking for? A break of. So for us to enter this trade, what are we looking for? We are looking for a breakout first, then a retracement, gradual retracement, then consolidation at our 0.5 and 0.618 Fibonacci retracement level, telling us the market is gearing up for another move to the upside. So if the market is respecting this level, we go down to the lower time frame, 15-minute time frame. If we are seeing a consolidation around here, then on the retracement, we can then enter the trade for a move to the upside. So this is the Solana chart. If you enjoyed the content thus far, smash the like button. It helps the YouTube algorithm. It helps more persons to get to know this video. And join us as we analyze the chart. So this is the trading setup we see on the Solana chart. We go down to analyze the Polkadot chart. Let's analyze this. On the Polkadot chart, we start from the daily time frame, where you can see the structure we are currently having on the daily time frame. In a while, we analyze this. The Polkadot chart, we clean it in the chart. On the daily time frame, we've been in a clear downtrend. We've been in a clear downtrend. The Polkadot chart in a clear downtrend. We'll apply our support and resistance level. Using our Fibonacci 2 on the daily time frame, this is the swing high the market was expecting. The drop, this is the swing high from the drop. The market came as high as our 0.5 and 0.618 Fibonacci retracement level and give us the break of structure we are looking for. Give us the break of structure, and then we move to the downside on the daily time frame. We add a retracement to the 0.5 Fibonacci retracement level, creating a new lower low on the daily time frame. Creating a new lower low. Right now, we are currently having a push to the upside on the Polkadot charts. We are still in a downtrend, so we are looking for sell opportunities. The market gave us a high, gave us a new lower low. This may only be a retracement to form the next lower high. So we can use our Fibonacci tool again. Take it from this level. Use our dots outline that this was the previous Fibonacci retracement level. And we can delete this Fibonacci. You can see that currently using this on the daily time frame and look at the chart, we are currently at our 0.5 and 0.618 Fibonacci retracement level. So that's how you draw the box. Just like as we analyze the other charts at this level, what are we expecting in the chart? We are expecting consolidations at this level and a break of structure for us to sell the market from the next lower high for the continued move to the downside. So if we go down to the 4-hourly time frame to spot the trend on the 4-hourly time frame. Draw a trend line. On the 4-hourly time frame, we've actually drawn a trend line. To support the trend to the upside. You can see that on this retracement, the market has been giving us higher highs and higher lows. Now the market is currently giving us the next higher high. If we're having a break of structure, on the 4-hourly time frame right now, this is our previous low. The level of 7.62 is our previous low. So for us to entertain a sell position at all, we need to have a break below this our previous low. If the market gives us, still maintains this as a previous low. So if the market comes back and gives us consolidations at this level within our 0.5 and 0.618 Fibonacci retracement level, creating a new higher low, then we can then shift our low, our support level to that level. But for now, this is our previous low. For us to consider a sell position, the market has to give us a break. The market has to give us a break below this our previous low. A break below this our previous low, then any form of retracement, then we can then sell the market for a continued move to the downside. But if the market is not giving us this right now, we'll wait as we consolidate at our Fibonacci retracement level. We'll wait for the consolidation, and then when the market gives us a break of structure, we can entertain a trade. It's also important to note that at this our 0.5 and 0.618 Fibonacci retracement level, if we are having a push, a break, if this volatile candle continues to the upside and we're having a clear break above our Fibonacci retracement level, and then if the market gives us a retracement, any form of retracement on the lower time frame, if we're having a clear break above this our Fibonacci retracement level, then any form of retracement on the lower time frame, we can buy the market to move to this support level. Remember we outlined this our Fibonacci retracement levels at this level. So the market will come back, come and test this level, and then as far as we are still facing a rejection from here, and then entertain a sell position on the higher time frames. So that's what we see on the Polkadot chart. For now, we wait for the market to do its thing. We do not want to be impulsive to that, but we want to react as the market react to the trading setup the market gives us. Don't forget that you can also drop the favorite cryptocurrency that you want us to analyze. We can analyze it together in the live stream and see trading setups. So we've looked at the Polkadot chart, we've looked at the Ethereum chart, we've looked at the Solana chart. We'll also look at the link, chain link. USDT. So for Chainlink, we'll be starting from the daily time frame too. Chainlink starting from the daily time frame. Applying this level as a support level. The level of 9.35 as a support level on the daily time frame. We've gotten rejected many times on this level. So on the Chainlink chart, we're actually been consolidating. We've been consolidating within this range for a while now. In the Chainlink chart, we've been consolidating within this range for a while now. So we could actually come back and test this level in the coming days. Looking at the Chainlink chart, we've been consolidating within this level. So we could actually come back and test this level, the level of 9.3. Then we could either have a break or we could face a rejection. Go down to the 4-hourly time frame. When we are seeing consolidations, we do not want to enter the trade at the middle of the consolidation. Rather, it's either we buy the market at the support or we sell it at the resistance. Either we buy the market at the support level or we sell it at the resistance level. So looking at the Chainlink chart, we are actually approaching the resistance level of 9.3. So the best we can do is actually to draw a trend line. The best we can do to use our Fibonacci retracement level. You can see we are in a downtrend. We've actually only been consolidating the Chainlink chart. That's all we've been doing. We've actually been consolidating. So we can use our Fibonacci tool and say from the swing low to the swing high and expect this as a retracement. We wait for the market to do its thing on the Chainlink chart. I do not see a trading setup here. Rather, if the market comes as high as level of 9.3, we get rejected, have a break of structure. That's why it's important we can draw a trend line. Trending charts, that's what we can do. Draw a trend line when we approach this level. So if we have a break of structure, then on the retracement, then we can then sell the market for the continued move to the downside to the support level on the Chainlink chart. That's what we see on the Chainlink chart. Remember, nothing in this channel should be construed as a financial advice. This channel is strictly for educational purposes, empowering traders with trading setups to take advantage of the opportunity the market presents. So if we look at Shiba USDT, the meme coin. Shiba USDT. Shiba chart. We actually delete the previous setup. We look at it from the daily time frame. daily time frame, the Shiba chart, we've actually been in a downtrend too. The daily time frame, Shiba chart. What we can do is we can apply our support and resistance level. On the daily time frame, this is actually a very important support level, level where we are, very important resistance level, which is the level where we are in right now. We tested, it got rejected to the downside, tested, it got rejected to the downside. We had a breakout on the daily time frame, a breakout on the daily time frame, where it was only a fake out as we came back to our support level and couldn't hold the support and we had a breakthrough. So currently in the Shiba chart, we are currently at our support level, our resistance level rather, on the daily time frame. At the resistance level, what we do is, remember, we do not sell the market at a resistance level. Rather, we wait for it. Either we get a rejection or we have a break of structure. So currently, we are consolidating at our resistance level. If we are having a clear breakout, if we are having a clear breakout, if we are having a clear breakout on the Shiba chart, then on the retracement, we can entertain a trade for a move to the upside. But if not, at this level where we are in, at this level where we are in, what we could do is to use our trend line. We've actually been consolidating. Use our trend line. With this level being the previous low, this level being the previous low. So on the Shiba chart, if we are having a break below this our previous low here, if we are having a break below this our previous low, clear 1 hourly break below this our previous low, the level of 1281, then on the retracement, we can then have an opportunity to sell the market for a move to the downside. So as traders right now, we'll be patient and wait for the market to do its thing. Right now we are consolidating. If it gives us a breakout, we can then enter the trade on the retracement, or it gives us a break either to the upside or to the downside. The Shiba chart, we are currently at a very important resistance level. Shiba chart. So the market actually, if we have a break of structure from here, will actually come back to this our previous resistance level, this our previous support level rather, this range, come back to test this level. If we actually come back to test this level, which is the level of 1183. So for most of the charts we've analyzed today, we have to be patient and wait for the market to do its thing. We've only outlined the trading setups. So the market does its thing, gives us an opportunity. Remember that risk management is also very important as we trade. You need to risk with a very important, very low stop loss, so that when we lose the trade, we do not lose all of our capital. Risk management is very important as we trade the crypto market. We also want to put a considerable stop loss to let the market, give the market room for volatility, let the market do its thing. So that's what we see on the Shiba chart. Remember, if you're not subscribed to the channel yet, click on the subscribe button, turn on push notifications so you stay up to date on analysis like this. We'll be doing live streaming every morning, and then we'll make a video for trading setups later in the evening. We've looked at the Shiba chart. We'll also look at ADA. UABA charts. Cardano, USDT. We start from the daily time frame too. It's important to start from the daily time frame while analyzing the chart so that you can have a clear picture, you can have the overall trend. But when we are the trend from the higher time frame actually has a very big influence on what happens at the lower time frame. So this was the trading setup we analyzed in our previous video. We are applying our Fibonacci retracement levels. We're actually coming from downtrend too on the ADA chart. So we keep looking for sell opportunity. The market hasn't given us reasons for us to start obtaining long opportunity yet. They are currently still giving us lower lows and lower highs, lower lows and lower highs. Market came back to test our previous low, didn't give us a new lower low, but hasn't given us a lower high too. So we still look for sell opportunities on the chart. So on the daily time frame, we are currently at our Fibonacci retracement levels. In the daily time frame, this was the trading setup we analyzed previously. That was on Friday. We saw consolidations over the weekend at our Fibonacci retracement level. So we can then go to 4-hourly time frame, support the trend to the upside. So in the 4-hourly time frame right now, if the market is expecting this Fibonacci retracement level and we face a rejection from here, face a rejection from here, our previous the previous support level. If we are having a break below this level, just like we've analyzed, if we are having a break below this level, then we can then entertain sell opportunities, sell trade for the move to the downside. When we are having a clear break of structure, we could actually come back and test this place, but testing this level doesn't mean a breakout yet. We have to break below this level, and then on the retracement, and then sell the market for the continued move to the downside. So that's the bearish case scenario for Cardano. We also have the break of structure too. Which shows me that this was the previous resistance level, the level of 0.598, 0.5908. So you could actually come back here if we are having an impulsive move to the upside at this level here. So at this level too, we continue looking for sell opportunities to sell the market for the move to the downside. But if we are having a volatile move to the upside, then the market is actually telling us that we are coming to higher time frames resistance level, higher other resistance level. So we could then on the retracement, any form of retracement, go to the 15 minutes time frame. If we are having a break of structure, if for example the market is not respecting this Fibonacci retracement level and we see a volatile move to the upside, any form of retracement on the 15 minutes time frame, lower time frame, and then buy the market, enter the trade for the move to the upside. We know we have a resistance level here, so the market will actually come here and test this level before we have the drop. Okay. So that's what we see on the ADA chart. We are analyzing trading setups for the charts. So we analyze quite a number of cryptocurrencies for trading setups. We will be stopping for today. If you enjoyed the content thus far, click on the like button, turn on push notifications, subscribe to the channel So you stay up to date on daily analysis like this. So for now, bye bye.